Imagine this: the government agency that protects you from financial scams gone. Elon Musk just called for deleting the Consumer Financial Protection Bureau, the agency that keeps big banks and payday lenders in check. But why? Is this a genius move to free up innovation, or could it unleash financial chaos that hits your wallet? This isn't just talk. Musk might actually have the power to pull it off. But what happens to your mortgage, to your credit cards, and your money if he does? Imagine this: a bank robs you of your money and you have no one to complain to. Or they could charge you exorbitant interest, 50% per year on your credit card, or 250% on your payday loans, with no protections for you. Even worse, what if they trick you into overpaying fees on your mortgage and you are forced to choose between losing thousands or losing your house? Yes, this is not scaremongering. This is exactly what the CFPB fights against every day, protecting people like you and me from big banks and financial institutions far more powerful than us. And now imagine the one agency designed to protect us is gone overnight. It would be the wild, wild west of financial markets. In this video, I'll be diving deep into Elon Musk's bold call to dismantle the CFPB. Why is he pushing for this? Who's backing him? What are the chances this actually happens? And most importantly, how could this decision impact you? Whether you have a mortgage, drive a car, rely on a credit card, or even just keep money in a bank account, this could change everything. This isn't just another headline. This could be the most consequential financial decisions of the decade. So buckle up, because I'll be breaking it all down right now. Hello everyone, welcome back to Mastering Mortgages with Yatin, where I simplify the complicated world of mortgages and personal finance. Today, we are diving into one of the biggest financial debates of the decade: Elon Musk's call to abolish the CFPB, the very agency created after the 2008 financial crisis to protect consumers like you and me. Is Musk onto something? Or are we heading straight into another financial meltdown? The CFPB, or Consumer Financial Protection Bureau, was born out of crisis. After the devastating 2008 financial meltdown, millions of Americans lost their homes, their savings, and their financial stability due to predatory practices by big banks and financial institutions. Congress passed the Dodd-Frank Act in 2010 to prevent history from repeating itself, and at its core was the creation of CFPB, a federal watchdog designed to stand between you and deceptive, unfair, and downright abusive financial practices. But what exactly does CFPB do? It focuses on consumer financial products, things like mortgages, credit cards, auto loans, student loans, and payday loans. If you have gotten a mortgage before, you must have seen an LE, also called the loan estimate, or a CD, also called the closing disclosure. Both those documents are a gift of CFPB. Before that, we used to have what's called a GFE, a good faith estimate. CFPB is the one who came up with LE and CD with the thought that those documents are going to be much more clearer and will help consumers like you and me shop for rates and clearly see what they are signing up for in terms of the mortgage. What else does the CFPB do? It focuses on consumer financial products like mortgages, credit cards, auto loans, student loans, and payday loans. Its mission is simple but powerful: to ensure financial companies play fair. For example, the agency makes sure mortgage terms are clear and that lenders don't surprise fees or raise rates without warning. It clamps down on payday lenders who trap borrowers in cycles of debt by charging interest rates as high as 400% per year. And it investigates and fines financial institutions for hidden fees, deceptive marketing, and discriminatory practices. Since its creation, the CFPB has returned over $14 billion to consumers who were wronged. It's tackled everything from big banks charging hidden overdraft fees to credit card companies misleading consumers about rewards. And it's not just punishment, it also educates consumers, providing tools to help you compare mortgage rates, manage credit, and avoid financial scams. Recall the example of LE and CD that I shared? That's an example where they came up with those documents to make it more clear for consumers like you and me. The agency doesn't just regulate, it levels the playing field. Before the CFPB, large financial institutions often exploited their power, knowing that individual consumers didn't have the resources to fight back. But the CFPB, in your corner, there is an advocate dedicated to protecting your rights and holding these companies accountable. Think about it. Whether you are signing a mortgage for your first home, taking out a student loan, or even just using your credit card, the CFPB is the reason you are protected from fine print tricks or outrageous fees. It's the watchdog for your wallet, making sure financial giants don't stack the deck against you. Without the CFPB, the financial landscape could return to a time when the powerful ruled unchecked, leaving everyday Americans to fend for themselves against predatory practices. It's no wonder critics call it one of the most important agencies of our lifetime. So, why is Elon Musk so determined to get rid of the CFPB? On the surface, he frames his argument as one of efficiency, claiming there are already too many overlapping regulatory agencies in the US and the CFPB only adds unnecessary bureaucracy. But when you dig deeper, it's clear that there's more to this story. Musk and CFPB are on a direct collision course. And it's not just about principles, it's about power, money, and control. First, let's address the broader criticism. Musk and other critics like the venture capitalist Mark Anderson argue that the CFPB stifles innovation, especially for startups. Anderson famously said on a podcast that CFPB terrorizes financial institutions and discourages competition. His firm, Anderson Horowitz, has had run-ins with the CFPB before. One of their portfolio companies, LendUp, was fined for deceptive marketing and unfair lending practices and eventually shut down. Another company called EarnIn, a financial tech company, faces potential regulation under the CFPB's proposed rules targeting payday lending and fee disclosures. Their frustration isn't unique. Critics of the CFPB often claim it places burdens on smaller financial firms, creating compliance hurdles that only large, established banks can afford to clear. Ironically, they argue this protects the very Wall Street giants the CFPB was created to keep in check. Musk's ambition for X paints a clear picture of why he is butting heads with the CFPB. His platform is no longer just a social media network, it's evolving into a financial powerhouse. By securing money transmitting licenses in 38 states, Musk is paving the way for X to become your go to for payments, banking, and even investments. His vision? To make X the go to platform for everything messaging, payments, investing, and banking. But this bold vision has hit a roadblock. In November 2023, the CFPB finalized new regulations allowing it to supervise digital payments like Venmo, Zelle, and yes, X also. These rules aim to ensure that tech companies handling your money are transparent and accountable as traditional financial institutions. But for Musk, this is a direct threat. By stepping in to regulate platforms like X, the CFPB could limit Musk's ambitions, force compliance costs, and even investigate how X manages consumer funds. At its core, this isn't just about regulation, it's a clash of philosophies. Musk sees himself as a disruptor, someone who tears down outdated systems to build something new. The CFPB, on the other hand, was designed to enforce the rules and prevent the chaos that unchecked innovation can bring. To Musk and Anderson, the CFPB represents government overreach, slowing progress in the name of protection. To CFPB, Musk's vision of a largely unregulated financial platform is a potential recipe for disaster. And let's not forget, Musk isn't exactly a fan of regulators to begin with. He famously clashed with agencies like the SEC and the NHTSA in the past, often tweeting his disdain for what he sees as government interference. The CFPB, now standing in the way of his plans for X, has become his latest target in the long running feud with regulators. In the end, Musk's fight against the CFPB isn't just ideological, it's deeply personal and financial. His vision for X as a financial platform directly conflicts with CFPB's mission to protect consumers. And as the CFPB steps into tech finance world, it's clear that Musk sees the agency as a roadblock to his plans for X. The stakes couldn't be higher, not just for Musk and his investors, but for consumers like you who rely on these protections. Here's the flip side. Supporters argue that without the CFPB, companies could go back to the Wild West days of predatory lending, think surprise mortgage rate hikes, and hidden payday loan fees. So, who's right? Let's imagine a world without the CFPB. Experts warn it won't just impact payday lenders or digital platforms, it could shake the entire financial system. The Mortgage Bankers Association says scrapping the CFPB could cause disruptive uncertainty in the mortgage market, making it harder for consumers to buy or sell homes. Rutgers law professor David Knoll says without the CFPB, financial firms would have free rein to engage in deceptive practices, leading to another potential crisis. Remember, the 2008 crash happened because agencies failed to protect consumers from risky financial products? Do we really want history repeating itself? So, could Musk's dream of deleting the CFPB actually happen? Short answer, it's highly unlikely, and here is why. The CFPB's funding is insulated, coming directly from the Federal Reserve, not the Congress. Plus, dismantling it would require an act of Congress. And with the Senate divided, that's not happening anytime soon. The US Senate comprises of 53 Republicans and 47 Democrats. This composition grants Republicans a majority, but not the 60-vote supermajority required to overcome a filibuster. Therefore, any attempt to dismantle the CFPB would face significant legislative hurdles. And even if Congress did try, the courts have upheld the CFPB's constitutionality twice. So while Musk's tweet sparked panic, experts agree this is more a rhetoric than reality. So what's the verdict? Is Elon Musk trying to simplify a bloated government? Or is he playing with fire that could burn us all? The truth is, whether you love or hate the CFPB, its absence could mean major changes to your wallet and your future. Do you agree with Musk? Or do you think CFPB is essential? Let me know in the comments. And don't forget to hit like and subscribe if you found this breakdown helpful. I tackle the big questions in finance every week, so stay tuned for more, and I'll see you in the next video.